Hi guys, I'm James Beggs. I'm a real estate coach here at the Infinity Wealth Real Estate Team based out of Oakville, Ontario. We service many markets in the southwestern GTA. But today what I wanted to do is talk to you about a couple of questions that often come out from our clients that we thought would be useful to you. If you have any interest or think that this is of value to yourself or to anybody that you know, make sure to like and subscribe. So hopefully what we can share is of some value. What we're finding a lot of clients are getting, questions are coming to us right now, especially in this really overheated or really hot real estate market. I'm sure you've seen a ton of articles online in the newspaper, social media talking about how hot and how upward trending the real estate market is, and in anywhere from Toronto, Oakville, Hamilton, all the way out to Niagara Falls, we're seeing the same trends, even up into cottage country. And so a lot of our clients come to us and say, is now a good time to buy or should we wait? And what I really wanted to dive into is, why waiting could be a dangerous game. And so there's a couple things that we want to factor in when understanding why the market is doing what it's doing. So first off, real estate market right now, especially where we are, is very simple. It all comes down to supply and demand. And those two things feed off of each other. And so let's talk about each of those independently so you can understand, again, why the market's doing what it's doing. So let's talk about supply first. So supply is really dictated, and that's the supply of housing, whether that's condos or townhouses or single family detached, whatever it is. It's dictated by a few things. It's a lot of developers who are building, but even what they are building and the density of the housing that they're building is dictated by the zoning of the land that they're building on. So for example, in the core, in Toronto and in some of the bigger urban centers, you'll see, because land is at such a premium, you'll see they have the permission to build much higher densification, which is condo units, stuff like that. Out in the the suburban areas, like in the Hamilton Mountain or in Burlington proper or stuff like that, you're seeing a lot less of those condos because there's a lot of pushback from the people that live in those cities that they don't want to see a condo building, in a residential area. So what you're seeing is a bigger limit on what the developers can actually build. So with this limit, you're seeing that, we talk about, you've probably heard the term urban sprawl, which is where you see a lot of low density single family houses in subdivisions, stuff like that. And that's actually a byproduct of the zoning restrictions that's placed on the developers, as well as what the people that live in these areas want to see. And so what happens is when there's a limit on the amount of houses that can be built, when the demand doesn't change, the demand actually has been increasing. We'll talk about that because that's the second component. Then the demand for those houses pushes the prices up because there's less houses for those people to live in. And so then you've heard the term of bidding wars. And we're seeing that all across the markets that we're in, anywhere from 5, 10, 15, all the way upwards. I've seen as high as 30, 40 offers all in the same house. And what I talk to my clients about is you have to remember when there's 40 offers on a single house, that means one person wins and 39 people lose. And those 39 people are on to the next house. And when you're looking at, starter family homes, which is where the majority of, you see the high volume of offers are, is you'll find that they're all very, very similar. We're looking at 1950s to 1970s bungalows, and these are all in the starter family home price point, and that's why there's such a large number of people that are competing for the same type of housing. So builders aren't incentivized to actually build single family houses, but sometimes that's what they're limited to build, which is why that's what you're seeing. Now we're seeing more and more where they're being allowed to build townhouses and some semi-detached stuff, but it's still not enough to satisfy the actual requirements. Just to give you an idea of some numbers, I've got some stats here. If we're looking at housing completions, which is the annual housing completions in Ontario, we really haven't seen an increase in that as far back as 1971. So they showed the stats for 5-year periods, and between 1971 and 1976, there's really no change to housing completions. So even though our population has increased dramatically, the number of houses being built or the units being completed hasn't been growing. And then looking just back at the last 5 years, there's been 65,000 more households built, households formed, which means how many families have come together to live in a house. 65,000 more have been required than have been built. And now we start to go into this, the demand section of it. So why are we seeing such a huge increase in demand as well? And that has to do with our government policies. So federal policies right now have shown that the government, especially Ontario government, has looked to add 1.2 million new people to Ontario by 2023. And so as you can imagine, when you're adding 300,000 people into Ontario, most of those settle in the urban centers, which is in the Torontos and Hamiltons and the bigger areas. The more people that you have now coming in without an increase in the number of houses that's being built, you're seeing upward price pressures because more and more people are bidding, and you're finding, okay, last week it was this price, next week it's going to be higher and higher as more people come in. And so, let's use some quick numbers to again kind of go over really why could be dangerous to wait. If you look at the average price of a home today, let's take Hamilton for example, you're at about the 800,000 range. Now that is just average over all kind of different types of housing, but it's about 800,000. COVID has caused a bit of a change in normal appreciation rates. Normally we're seeing anywhere from 7 to 10 as kind of the average. Since 2020, that's gone up to about 20%, but let's take that off the table as kind of, we don't know what's going to happen in the future. So let's take a little bit more reasonable number and one that's actually easier to work with. Let's look at 10%. So on an $800,000 house at 10% appreciation, that means it's going to go up potentially by $80,000 in 1 year. So if you say, I'm going to wait 3, 5, 6, 10 months for the market to cool down, what happens if it doesn't? Based on the supply and demand statistics that we're seeing, there's no reason for it to cool down. So if it even stays on trend at 10%, you're looking at a price increase of about $6,700 a month. So if you said, I'm going to stop looking in the summer and I'm going to look again in January, February, you could be looking at a price increase of anywhere from $50,000 to $60,000. And that's if we use that conservative 10% appreciation. So all that being said, it might be very frustrating for those, especially first-time home buyers that are looking for a new home to be up against this many people in this competitive housing market. But if you take that time off and you take your foot off the gas to, maybe wait it out to see if the market cools down, especially when all these market indicators show that it's not going to happen, it can be very dangerous and you could get priced out of these markets. So we've seen a lot of first-time home buyers that maybe are looking in, they've come from like a Toronto or another urban center to go out to where it's a little bit more affordable. And if you wait, then that center that you moved to, say they were in Toronto looking and now they're looking in Hamilton, and now Hamilton becomes too expensive because they waited too long. So it could be very dangerous as a buyer. And from an investor standpoint, we're usually seeing the rents keep up. But again, it goes down to, what are you approved for, and making sure that you don't get priced out of the city that you want to buy in. Remember, at the end of the day, real estate is very simple. In a low interest rate environment that we're at today, if supply and demand doesn't change, we're likely going to see a trend in the same direction. So if you're interested in buying, whether it's for yourself, for a primary residence, or as an investor, the time to act is now as opposed to waiting. All right, thank you so much. Okay guys, thanks for listening. Remember, if you found that insightful and helpful in any way, make sure to hit like and subscribe, and we're going to try and get you more information like this on a weekly basis.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. That link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.